Welcome back, Alpha Hunters. The markets are closed for the week of April the 19th. And let's take a look at what went on this week. Nice little gap up here to start the week on Monday. It's actually like a 0.85% gap up. It was a strong gap up, but it was kind of to a level that we'll look at a little bit later into some daily moving averages where you would possibly be looking for the bearish play or the short play, and that was kind of where we kind of gapped to. We went sideways there for about 30 minutes, and then we didn't get any more of a bounce there, and it just kind of just rolled over pretty much the whole day. We tried to bounce there a little bit of the mid-morning as we kind of came into the neutral line from Friday, but it didn't hold. We bounced and kind of just broke that down for the rest of the day. Tuesday, kind of a flat day. Not a whole lot going on until we got to the afternoon. Then we got Jerome Powell talking basically from this point on that day. And it got a little choppy. It got a little squirrely. But, I mean, you see we just didn't do a whole lot that day on Tuesday. We did in negative. Wednesday, nice little gap up. Traded down pretty much for the first 3 hours there. 4 hours. 3 hours. And then a nice little bounce there going to the middle part of the day. But we rejected and rolled back down. You're kind of wondering if we were going to, run back up, maybe even possibly to the open there towards the close. But no, got that rejection there in that last hour, rolled back down towards the lower ends of the day, not at the low of the day. And then Thursday, nice little higher open, pushed higher off a quick retest, but pushed higher to the middle morning part of the day, going to the middle part of the day, and then we just kind of rolled over and ended pretty weak as we got down to the lower and broke the lows of the week. And we ended kind of towards the lower ends of the day again. And then Friday, kind of a flat open, but we just rolled over, tried to bounce, rolled over again, just ended at the lower ends of the week. So it was not a great week. And this kind of goes back to, a couple of weeks ago, kind of changing the thumbnail to sell as, we were kind of due for one, a pullback on the market. Made sense. Two, the Qs have been really lacking behind, not even for the past couple of weeks, but really the past couple of months, really going back to February. They've been kind of lackluster in a lot of ways, and the Qs are a big part of the market. SPY performing. So there's a lot of things that just been breaking down recently. Even Wednesday morning got some ASML, which is a silicon semiconductor kind of fabricator, makes machines for making semiconductors. They didn't have great earnings. That's why, you see we sold down there pretty good on Wednesday. So a lot of things not going well. The market was priced very richly, and yields have continued to absolutely crush even this week. And we'll get into a lot of that. All right, take a look at sector performance for the week. It's not all a disaster out there, right? But this is what happens when you get super concentration in the market. You can see that we have some outperforming sectors, a lot of sectors outperforming this week. But you see tech down here, huge weighting on the market, on the Qs. SPY was what I kind of generally refer to as the market. And you can see just how bad they performed this week. The XLK was down 6.32%, or roughly 6.33% this week. That is a disaster. The market won't be able to take that one much more. XLY, discretionaries, not exactly a great week there. Down a little bit over 4%. Real estate also underperforming. Obviously, real estate's going to really struggle if yields are going higher. Yields have been going higher. They definitely went higher this week. So, real estate really had a bad day there on Tuesday. So, not doing great things there. You also have communications, XLC outperforming there. All right. Industrials doing pretty well. Energies, materials outperforming. Healthcare outperforming on the week. Not quite positive there as far as the weekly performance, but pretty close to, basically flat. Financials outperformed. Staples outperformed or actually had positive gains for the week. Utilities, almost a 2% gain on the week. So, we saw some pretty good utility flows, especially starting roughly halfway through the day on Thursday. You can see as the market was downturning, utilities, this yellow line kind of like right here, just started climbing. And people started getting really defensive. And what was happening on Friday as the market was downturning? People were going into defensive utility areas. And this is some of those things that kind of been talking about over the past couple of months that I get they haven't been exactly working out, but there has been a lot of things that I haven't really liked about the market. I, try to say, hey, I'm not trying to be risk all in here, but as far as, be risk tolerant, be aware of some downsides and things like that. You want to protect capital, go into things that are not super concentrated like tech is. Apple, which saved tech and the Qs, triple Qs last week on Thursday and Friday with huge Apple performance. Well, this week Apple got absolutely crushed. They gave it all back. It got smoked this week. So that's what happens when you get super concentration. And one thing I don't typically show off all that much on the channel is the futures. I don't really care to focus so much on futures, but one thing that was very interesting I did notice Thursday night was how much futures dropped off. Look at this drop that we had on futures overnight on Thursday. And I mean, we wound up climbing all the way back overnight to kind of open flat there on Friday. But Thursday after the bell, I mean, futures dropped off quite a bit. And, you can see just how much they really dropped there. If you go to a daily kind of time frame and turn on the long terms, the 100, 200, you can see where it came down and hit. It hit right into that 100 SMA right off of it. And that's kind of one of the things we've been talking about in the midweek kind of videos and live streams is looking out for that 100 on the S&P 500, and it hit that in the futures overnight Thursday night, but we wound up bouncing back. You didn't really know that if you just played the stock side, but a very interesting bounce there, but it looks like we still might be moving there on the stock side anyway. All right, taking a look here at the VIX. Well, we did have a nice little push higher to end the week last week. Well, we continued that push Monday, Tuesday, Wednesday, and Thursday as the market was breaking down, clearly breaking down levels. I mean, you see the VIX didn't continue higher, just kind of continued to pull back. I would say even Friday, for how much the market sold off throughout the day and continued to sell off throughout the day. It's not like we saw the VIX go higher throughout the day. It looked like it had a higher open. Yes, it does. If I go intraday, I mean, does it kind of make sense? Not really. I mean, it doesn't really seem like it kind of had that higher open, so I don't know why it shows that on the daily. But you can see that we did have a little bit of a trend higher throughout the day, but it wasn't crazy. Guys, the VIX is telling you we could continue to sell off. Okay, we could definitely continue to sell off. So I would continue to be protective, continue to look to be protective. Take a look at the DXY. Very nice continuation to start the week, Monday and Tuesday, especially after last week's huge move. Kind of mentioned, hey, I'd look for some consolidation here. The DXY is not one that likes to be deviated away from the the moving averages all that much. If you get strong moves, look for some multi-day kind of pullback consolidation into the moving averages. I would expect DXY to maybe hang out maybe another day or two, especially if we get a quick drop here, maybe Monday or Tuesday. Look for that 10 EMA. I would definitely be a buyer off that 10 EMA as it continues to come up, and probably just continue to ride that then higher. But as for now, I mean, DXY looks pretty good to probably just be bullish until maybe we get up here around the 107.3 area, 0.4 area, this top that we had back in October. At that point in time, I'd maybe take some off, maybe look to reassess. You're probably going to get some kind of resistance at that level. All right, take a look at the GLD, the Gold Trust. You know what? Last week's Friday's price action, I would have thought we would be kind of like on a move lower, especially with how much dollar has showed strength. Yields also showed strength. But gold consolidating sideways here. It looks pretty solid to me, man. Looks very precious indeed. So I don't really know. I would just, if you're in it, I would just kind of stay there. But I'd be much more willing to be bullish on any kind of pullbacks. Other than that, I wouldn't be surprised if we did see a sell-off coming soon. But if we continue sideways too much longer, maybe into halfway part of this week, especially if we get like a quick wick down to the moving average as it's coming up, the 10 EMA at least, yeah, maybe we continue higher to the second half of this next week, maybe even going into May. All right, let's take a look at those yields, those sweet yields that has caused a lot of caution on the market right now. At least a lot of people are finally paying attention to it. It's something that we've been talking about quite a bit on the channel. But we did continue higher to kind of start the week. Monday, nice little push higher. You didn't know what was kind of kind of happened here from Friday's price action, then continue higher again Tuesday. Wednesday, a little bit of a pullback. Thursday, a little bit of bounce. Look at that! Look at that huge lower wick there. Oh my goodness! Look at that! Look at that huge drop off Thursday night. But everybody came. Yields came right back up. So people went into the risk adverse areas Thursday night as futures were kind of selling off. That was kind of basically the same time, right? You got this huge drop here, kind of coincides with that drop in the futures that we saw earlier. And then basically overnight, it kind of reversed out. And yeah, I mean, it looks pretty strong. It looks like yields, to be perfectly honest, are going to continue higher, because that's what that says there on Friday. Basically just a quick lower test, and people took the opportunity to reposition on that lower move there on yields. So I think yields will probably go higher. We might consolidate maybe a little bit longer, maybe Monday, Tuesday, but I would expect yields to go higher. And what would that mean for the market? It's not going to be great things for the market. It's not. It's going to be pretty bearish. 10 and 2 inversion. Nice quick pop there on Monday. And other than that, nice little pullback. Still might be in this upswing, starting to turn up. We'll have to see if we come all the way back down to these lows. Maybe we are just in a sideways consolidation area, but if we start to bounce from here, yeah, then we might be on this upswing on this 10 and 2 inversion. So looking pretty decent here. All right, let's take a quick look through the bonds, the HYG high yield corporate bonds. I saw a quick drop off to kind of start the week. That was really as yields are really continuing higher. Pretty good consolidation here over the past couple of days, but I mean, that was also kind of what yields were doing, consolidating over the past couple of days, although it was kind of violently or volatile. The LQD, same kind of deal. Nice little drop off there Monday and Tuesday. A little bit of a consolidation retest there on the LQD Wednesday, Thursday, and Friday. Take a look at the TLT. So we looked previously on the live stream on a similar kind of scenario, but it was back over here in this kind of time frame. We had like a nice little downward channel, and then we broke that downward channel down. But one of the things that we had kind of noticed is we broke the downward channel, kind of like how we did this past week on Tuesday, and we bounced back into it. We kind of hung out for a few days, and then this was maybe like 4 or 5 days. It hung out there 4 or 5 days, and then it really broke down, and then that breakdown lasted for like a month. So if we see that again, one, think about what yields would do. Yields would absolutely scream higher. Two, think about what the stock market would do. If we see yields really climb, to me that would be yields, especially the 10-year, climbing above 5% easily. And if that's happening, you're really going to need to think about what the market's going to do. And this is one thing that we've been kind of talking about on the channel, is what happens if the market, which has been expecting rate cuts throughout the year, but is not going, that's not going to be the actual path. Maybe the actual path is rate hikes. Or what if we see higher interest rate? What if we see higher yields? Yeah, that doesn't sound like a great recipe, because the stock market doesn't even think about that scenario even happening. All right, let's take a look through these 5 major ETFs I usually track. I'll turn on the long terms, the 100, 200. I don't normally do that, but once you kind of break through, the 10, 20, and the 50, and once you break through that 50, now you start to get the huge gaps between some of these moving averages. Now we start to get some big time move setups, really looking good. So going back for a couple of weeks, we kind of talked about this really looking good here. This like head and shoulders action here. Or even on this side, you even got like a double shoulder kind of setup, and then you broke those down both. Guys, yeah, I mean, here you go. This is what kind of follows breaking down a head and shoulders, right? You just get the sell off. The one thing that's kind of nice here on the RSP though is it has traded down to the 100 moving average, and it has kind of retested there for almost the past 4 days, definitely the past 3 days, kind of connecting in with that 100 moving average. So to me, that looks pretty good. The fact that it is getting support, we're seeing more broadening out, people getting out of big tech, and we'll even see more evidence of that here in just a sec when we look at the Qs. But RSP not looking too bad, but we do have a pretty big gap here, pretty big air pocket. If we do get through that 100, which it is consolidating, so if we do get a close below the low of this week, which looks like it was on Thursday, yeah, I mean, definitely just look for the play back down to that, probably that 200 moving average level, which probably also coincide with this low that we had back in mid-January. RSP, though, holding tough. The DIA also consolidating pretty well, but it's actually consolidating under the 100 moving average. I don't like the way this looks because it's under that 100 moving average. And really, you could even say that this is kind of like a flag pattern right here. So not to say that it is and it's set up to be bearish, but it kind of is set up to be bearish. Not trying to like ruin people that are trying to be dip buyers here on DIA, but it just doesn't look good that it's consolidating right here under this 100 moving average, especially as the moving average is kind of coming down, the 10 and at least coming down, 20 is going to be following that. So last week I'd mentioned that it's going to be a tough one here on the DIA. You got these tops were consolidated back at the beginning of the year, end of last year, beginning of this year. This would be a pretty good consolidation spot if it broke that 100 moving average. Down here would also be a pretty good spot around 371 or so. This previous all-time high, also going to be a pretty solid spot. But the fact that it's consolidated here for multiple days now, I think this is the consolidation, the potential bounce spot. A lot of people trying to bounce off this previous little consolidated top. If we break this down, I think you're probably just looking for the move back down to that 200 level, 200 moving average level. So that's kind of my thoughts there. But I think all those levels are going to be respected, or at least you have to respect them, even if you are going to look to play that bearish. The IWM, the Russell 2000. For how this thing has not been performing all that well the past 2 weeks. I mean, this thing's had some face ripper days, just rip your face off kind of days. Did not do too bad there on Friday. Had a nice little gap down and got bought up, and it is between that 100 moving average and that 200 moving average. Honestly, I can understand maybe potentially buying some here because there's some strength here. I also would like to be buyers off that 200 and maybe even down here if it breaks this low and maybe checks into like this kind of support level. So you got a couple different spots and maybe you're looking to be bullish here. I would rather be buying the IWM any kind of moves lower, mostly because it didn't really have the upside that we saw in other areas like the Qs. Speaking of the Qs, well, this looks hugely different than some of those that we just saw. This week was a hugely bad week for the Qs as tech just got ripped apart this week. You can see it's kind of strong last week. Thursday, Friday, kind of mentioned that Apple saved it pretty good there on Thursday, Friday. But this week, I mean, it just came out, gapped up. Kind of curious about that gap up for the start of the week, first 30 minutes. And then it just broke down super hard. It cleared a lot of levels, got below that 50 EMA, and it just continued. It went right down to that 100 moving average there by Thursday's close. Kind of curious. I thought we might see some dip buyers there, but we got below that level on Friday morning, and it just continued. And though the other thing I was gonna kind of mention, and what we kind of talked about on Thursday, is look for that. If we go through that level, that 100 EMA or the 100 SMA there on the Qs, look for the SPY to be bouncing off of its 100 SMA because it's going to be getting dragged down by the Qs. It'll probably be getting close to its 100 SMA. But for now, the Qs don't look great. I don't really know what would get it out of its funk. I think a lot of companies are going to really have to deliver on AI growth and earnings, and we haven't really seen that over the past year, or year and a half. I'd say year and a quarter. As really the only company that's really had the growth is NVIDIA. We've very briefly seen other companies have growth in that area. One of them, TSM, which is not in the SP 500 or the Qs. And another one is Micron. Last quarter kind of had some positive things about in providing some chips to AI type of chips and stuff like that. So outside of that, there really hasn't been much. AMD hasn't seen really any growth financially yet, but yet their stock price had been growing a lot. And I'm one that I like AMD, like that they're trying to do. Intel, another one. No. AVGO also was another one that had a lot of price stock appreciation, but they haven't delivered really anything on earnings. Nothing like NVIDIA. So this is there's a lot of hyped up stock price appreciation out there right now, and they better deliver this quarter or we're going to see some really serious downside here over the next month or two. And take a look at that SPY. I kind of mentioned, if the Qs do break its 100 SMA, we're probably going to be looking for the SPY to make a bounce off if it's SMA and 100 SMA, that is. So I mean, we're going to be roughly there. I mean, how far away are we? We're like 0.5%. So it's, I mean, that's nothing. We can easily do that in like first like hour to in Monday, and then maybe we start to see some bouncing. I guess the question is going to be like, do we bounce here at the 100 and start to like consolidate? Maybe we break down then later. Yeah, there's a lot of questions how it might look. I'm really kind of curious to see if we do bounce here, just how that looks, and what does that mean for the Qs? Because you can see the Qs were down 2% on Friday. That SPY was not even down 1%. It was down not even 0.9%. So what does that really mean for the Qs? And that was the other thing that we've been talking about is if the Qs break down, there's so much concentration in that tech area that it's going to drag down the S&P 500, even if there's broadening out, which we were continuing to see broadening out on Friday with the RSP actually trading higher on the day. So this is what happens when you get over concentration and those names don't live up to the hype. So alpha hunters, have a great rest of your weekend, and it's not looking good, especially if yields kind of consolidate here early this next week, and then they start to look bullish as we go into the end of April, maybe in the beginning part of May, or just yields look like they're going to go higher. I mean, that'd be a disaster for the stock market. So have a great weekend. Take care.